how far will the rupee fall? That's the question. Let's put that question to Rohit Garg. He's Director of Asia Forex and Rates at Bank of America Merrill Lynch, joins us right now from Singapore. Rohit, good having you. Thank you so much for taking the time out. Did it take you by surprise, the RBI decision? But more importantly, with the government officials in the preceding week also saying that they are comfortable with the weaker rupee, do you think all of this will feed in to a fairly accelerated downtick for the rupee in the near term?
Hi, thanks for having me here. Yeah, the monetary policy decision was definitely an unexpected outcome. But I think what's very clear from what the RBI governor actually said is that INR, the weakness that we've actually seen in INR this year, that's been only moderate. And if you look at volatility, INR volatility, that's actually been in line with peers, if not more. So in that sense, it's quite clear that RBI is not averse to further INR weakness. In fact, if you actually look at how INR has been trading, our own forecast, Bank of America Merrill Lynch forecast for INR to trade at 75, that will only imply that INR in real terms will only take out all the appreciation post 2014. So quite clearly that actually means that there are definitely upside risks to our own forecast of 75, given that the global backdrop continues to be quite fragile and RBI is not averse at all to further INR weakness.
Would this be an accelerated move, Rohit, or do you reckon that this swift move that we've seen in the rupee falling versus the dollar in the last, 6 odd weeks, takes off the pace? Even if the levels are going to be lower, it will now be a more steady downtick as opposed to the quick downtick that we've seen already.
I think there are a couple of factors that will determine how INR actually behaves in the next 1 to 2 months. First is oil. If you actually see one of the big reasons why INR has actually weakened so swiftly, that's been really the oil move. Brent has actually moved from 75 to 85 in a span of 4 to 6 weeks, and that has actually what's caused INR to weaken so quite swiftly. So of course, if Brent continues to weaken at such a pace, then we can't rule out more INR weakness at similar amounts of pace. But what's also clear is that by sending out a message that RBI is there to guard INR volatility, I do think that RBI will increasingly make sure that even though it's not really averse to direction, it will try to curb INR volatility.
Rahul, good morning to you. Just want to get your opinion, because at this point in time, with the rupee being where it is at about 74, it doesn't help the cost of inputs used, for imported capital goods, for services used by exporters which are paid in foreign currency, so which is really counterproductive to growth itself, which indirectly in a way also has its impact again on the currency. So it's a cycle. Do you see that putting further pressure, and what according to you is the correct real level for the rupee?
Rohit, the question is for you.
Well, yeah, for sure, INR weakness is going to have an impact in general on growth. But the key over here to understand is that INR weakness along with higher oil is going to have much more impact on the inflation trajectory than growth in the next 2 to 3 quarters. And given RBI's mandate to make sure that inflation remains around 4% on a credible and durable basis, it is quite important for RBI to actually come out with a hawkish stance, and that's what they actually did. I would have actually hoped that they would have hiked, but that's clearly not been the case. In any case, that doesn't really rule out a December hike. I still think that's pretty much on the table. Right, so that's what I would actually say.
Right. We're not going to be probably seeing a cool-off in crude oil prices anytime soon. Obviously, once the Iran sanctions come back into play, you've already mentioned crude oil, but once the Iran sanctions come into play, you're probably going to see more further pressure on the price of crude as well. So in terms of the, and with the currency doing what it's doing, is there any sort of projections, particularly in terms of growth, that can be hurt right now? Because, I mean, we've been talking about India's growth potential being at its peak. Any damage to that?
Well, we've recently lowered our growth forecasts But that's primarily based on the escalating US-China trade tensions. Of course, the higher oil also has an impact on consumption. But overall, I have to say that, again, as I said, it's, India is, as I've always maintained, India fairly remains a very idiosyncratic story. The consumption has in general been very strong, and that has what has resulted in a significant deterioration in the current account as well. It's not really the exports that have actually, lower exports that have caused India's current account to weaken, but it's been the significant improvement in imports, and that to the non-oil, non-gold imports that have caused the current account deterioration. So in that sense, I don't really think higher oil prices all that much is going to impact consumptions yet. But of course, the global backdrop is something we need to closely watch, and that will be a much more determinant of India's growth going forward. As opposed to your previous question, INR rear, I do have to say that, again, at 75, INR rear only takes out all the appreciation that has happened post-2014. So in that sense, we are not really at undervalued levels yet. And INR at 75 or even higher would still not be characterized as undervalued yet. So in that sense, I still think that we can actually see more upside risk to dollar INR above 75.
Rohit, just one last question from my side. We've been probably also witnessing pressure across emerging market currencies, and which is the reason why the Indian rupee, further exaggerates its losses, not just in terms of domestic pressures, but you're seeing the emerging market pack as a whole look weak. Is there any change of stance there, or there's further pressure across the board?
We continue to see further pressure on emerging market currencies. In fact, more recently, we revised up our forecast for dollar CNY as well. So now we actually see the peak of dollar CNY at 710. And that definitely has impact in general on EM currencies across the board. For example, over the weekend, we got the news about China cutting the RRR. Again, that actually continues to highlight that China continues to face growth pressures, which will again then manifest itself in emerging market currencies continue to weaken.
Rohit, one final question really from my end too. And even if crude were to cool off a little bit, should the talk of Iran die down a little bit, or there is some relaxation thereof, would you reckon that the new normal for the INR is south of 72 or 73? Because I did hear you mention that as per the rear, 75 does not make the rupee undervalued at all.
Well, crude oil has definitely been one of the big reasons as to why INR is actually weakened. If crude does actually come off, then at least what we are going to see is a bit more stabilization in INR. What we are going to see is a bit more two-way market in INR. Right now, it has only been a one-way market. But still, I have to say that if oil does cool off, then in general, what we can easily conclude is that INR is going to be in the 70s.
Okay, we'll leave it at that, Rohit. Thanks so much for taking the time out and joining us and giving us your perspective.